All right, guys, welcome back to another video here. Today is a video of introduction to Forex from all my people that has been highly requested in this video. So it's gonna be a step-by-step guide for all my beginners to Forex trading. So before we start the video, guys, I would like to say please like, comment, share, subscribe to the channel. Let's get the channel to 150k subscribers. We're trying to go up. So yeah, please like, share, comment, subscribe, and do all the nice stuff. And I've got some special stuff along in the middle of the video, so stay tuned, guys. I got a gift for you guys, and I got some free opportunities that we can make money. So yeah, please stay tuned. Got a little nice gift in the middle of the video. But back to the video. So yeah, today is going to be an introduction to Forex trading, and this is a video that has been highly requested. So let's start with what is actually Forex. So, well, Forex really is not actually a word. Funny enough, a lot of people might not even know this. Forex stands for foreign exchange, and what that means is foreign exchange means a lot of transactions that are happening between two different currencies. So now let's go through the definition of foreign exchange. So the foreign exchange market is a global, decentralized, all over-the-counter market for the trading of currencies. This market determines foreign exchange rates of all currencies, includes all aspects of buying, selling, and exchanging currencies at current or determined prices. So in simple and layman's terms, what this means is the foreign market is basically a market where the two currencies are either buying another currency or selling another currency, or exchanging both currencies at a specific price in the market in real time, or a price at the near future. So in other words, it's just an exchange between two currencies, whether it's based on real time price or in a set price in the long run. So that's Forex. That's the foreign exchange market as a whole. Now, you as a trader, or you that's new to Forex, you might be thinking, well, okay, how does this have to do with me? Because this has nothing to do with me making money in the market. Well, you're right, but it does in a way, because what traders then, those are based on this information, this traditional, understanding. Well, traders will then use this as a way to speculate on one currency rising in value or falling in value against the other to make money, or to make profit. So, for example, as in simple terms, as I said, it's exchange between two currencies. For example, the pound and US dollar. Well, if a trader buys the pound and the pound increases in value from 100 to 100 pounds, for example, quote unquote example, well, because price went from 100, the trader bought the price at 100, and the price went from 100 to 200. Though 100 difference is a profit for the trader who bought the pound against the US dollar. Vice versa, if a trader buys US dollar, sells US dollar sells pound against the US dollar, and the price of the pound goes from 200 to 100, based on them selling, and it goes in their favor, they make a profit bank between the £100 difference. That's how traders make money from these price actions and price transactions. So this is why it's very, very important for traders to understand the buying and selling of currencies at determined exchange prices. So that's literally an example to show you what we mean when we say exchanging currencies at current or determined prices. Okay, cool. Now we got that out of the way, let's move on to the aspects and basic concepts of Forex trading. So I believe every single trader, whether you're advanced, beginner trader, every single trader needs to understand these three key bullet points here: currency pairs, exchange rates, and pips. These are very, very important. So let's go through them one by one and then break it down so that you can understand why I say these pairs are very, very important to understand, at least for any trader. We can see that currency pairs is a quotation of two different currencies with a value of one currency being quoted against the other. Now, what that means is that because for a foreign exchange market, for a foreign exchange to happen, there needs to be two currencies. Well, in trading, the first currency listed of the pair is called a base currency, and the second is called cold currency. So that means, for example, as you can see, Euro USD. Well, the euro in this scenario is the base currency, and the dollar is the cold currency. So, for example, if I'm making a foreign exchange to buy the euro against the US dollar, what that means is I'm buying this base based on this cold price. So again, I'm buying the US dollar, I mean the euro, I'm buying the euro currency against the US dollar currency. And that's just simple how it literally as ABC. So it's nothing confusing. So yeah, the base currency is always the first one, and the cold currency is the second currency. As you can see in this lovely illustration here that I made for you guys to kind of break it down, and because obviously sometimes everyone is different learners. Some people are visual learners, and some people might read and understand that, but some people are visual. So if I do it this way, it's easier to understand. So yeah. And within currencies, there are two types of pairs. So we have majors and minors. Now, the whole difference, to keep long thing short, the difference is that major pairs are actively traded, and they have USD pairs, US dollar as a currency between these transactions. So, for example, we have the Euro USD, we have the USD JPY, the Pound USD, and you have the USD Swiss. So one constant currency you can see is the United States dollar, US dollar, which these currencies tend to be traded mostly around the world. So different foreign exchange, whereas the minor pairs are currencies that are not US dollars, as you can see, the pound, CAD, the Aussie CAD, and the Euro CAD. So simple as ABCD. So yeah, this is how the currency pairs are, on the forex market. This is a quick, simple, easy understanding for everyone to get how these things are on the market. Now, exchange rate. So exchange rate is basically, because we're exchanging two currencies, there needs to be the rate that these exchange are happening at. So a quick example here we can see on the side. So £1 sterling equals $1.24. So this is the rate that if I have a pound and I'm obviously exchanging it into the US dollar, this is the rate, or this is the cash in value that I will receive for exchanging £1 to US dollar. Because obviously the pound has more value than the United States dollar, which we already know that the pound is the most strongest currency worldwide. So yeah, this is quite a simple, basic understanding of exchange rates. There's no complicated, don't want to do too much to kind of like confuse you. So this is a very simple, easy, straightforward understanding for every trader to understand. So yeah, so this is the, again, base currency, cold currency. Okay, moving on. So now this is something that is very important. I want everyone to pay attention. So this is something that we traders tend to use to calculate how much profit that we are making, or when we're in a trade. So for example, as we can see here, the pound USD, another example. So the PIP it stands for the percentage in point or price interest in point, meaning whenever we bought the price. So if we buy the pound USD currency or transaction at £100, and let's say the PIP is 100.50. Well, if this price increases to 100.60 or 100.70, that's a 1 pip increase. To kind of means we have gone over break even, means we're starting to make profit, and we're starting to bank in the market. Simple as that. As you can see an example, this is a real proper price action to kind of show you a real price. Obviously it's not currently, but it's just an example. So it's always the 4th decimal point in majority of all currencies. Obviously the exemptions are the Japanese yen, which is have 3 decimal points. So yeah, that's something we worry about later on. So yeah, whenever we see an increase in the 4th decimal point to upside or downside, that's an increase in a pip. So that's 1 pip. So if this currency, if this number increases to this number, that's 2, that's plus 10 now. So it's 1, 2, 3, 4. So it literally just goes in numerical order. So literally that simple and straightforward, where it's literally a easy concept to understand. So we use the fourth decimal point to start counting our profit or our loss when in a trade on the forex market. So yeah, this is something that every trader needs to know in order to know how to manage their profits and loss, and obviously all these risk things, which is something that we will talk more in the future. But today we just focus on the easy and the beginners stuff to kind of digest as a baby. As we give you baby food, make sure you mature, and then you increase from there. So yeah, as simple as that. So yeah, and well, you might want to know more about who really are the people that are controlling the market, or who are the people that are really having the market and the back of their palm. Well, first of all, the market opens 24 hours, meaning from Monday to Friday, the market is open 24 hours. So the market doesn't close as well. The stock market closes after 8 p.m. UK time and 7 p.m. I think summertime, depending on the time from in. And obviously open 5 days a week. So from Monday to Friday, 10 p.m. and then Sunday, 10 p.m. to Friday, 10 p.m. Literally like that. As you can see, 6.6 trillion worth of forex transaction daily, which shows you how massively traded this market is, and which is an average of 250 billion per hour of US dollars. So that's very important. Now, as I said, who are these people that are trading these massive currencies, these massive amount of money in the market? Well, banks, for example, are trading. Central banks, international banks like JP Morgan, Barclays. These people are the guys that are controlling money when it comes to the bank's experts. Hedge funds are very people that that trade the market, obviously to make profit for investment purposes, that are very diverse in asset classes. Forex brokers are people that retail traders use to trade in the market. So obviously they do their own transactions, as this is mainly for spreads and quotes. Commercial companies tend to be companies that have overseas operations, so therefore they will hedge their currencies, for example, to pay their employees overseas. So they'll use the forex market in order to hedge their currency exposure so that they can minimize their losses if things go south or things goes against them. Simple as that. So yeah, these are the top people. Now, last but not least, is retail traders, which is me and you. We are the bottom of the food chain, because guess what? We don't hold that much of weight or capital to influence the price direction of the forex exchange. And which it makes sense. So therefore, yeah. So these are the people that control and are the main participants in the forex market. Okay. So yeah. So that's the end of the video here. This is just a quick breakdown, a quick understanding into forex. Just a quick introduction to show you the importance of the forex market, the concept of forex market, and and obviously these basics, which is the currencies, pairs, exchange rates, and pips, which these three things are the things that every trader, every beginner must know in order to then increase their knowledge from here as well. And I did say I have a present for you guys as well. So yes, all right, guys. Yep. So as I said, I had the present for you at the start of the video. So guys, this is app called Trading212. And they're currently offering free shares worth £100 for each friend that I invite. And Trading212, guys, is a fantastic stock is a fantastic brokerage account to trade stocks. Yep. So you buy, sell stocks. So whether it's day trading, whether it's long-term trading, Teslas, your JP Morgans, your HSBCs, whatever banks you're interested in. So this is a great way to start your investing in the stock market or investing in your future. And guess what? They're giving out free shares which are randomly selected, and obviously they're valued up to £100. So all you have to do, guys, is click the link below in the description, and I'm going to paste the link to the comments so that you can go straight to the link, click the link, fill in your details, and obviously there'll be like £1, I think that's all it requires, and you should get your shares within the next 3 to 5 working days or stuff like that in your account. And obviously, if you choose whether you want it, you choose to get that money in cash, you can sell your shares, which will be exchanged to cash within the next 30 days. So yeah, it's literally simple. All you have to do is click the link below, create an account, confirm your identity, and you get some free shares worth up to £100. Back to the video, guys. So yeah, as I said, guys, end of the video, please like, comment, share, subscribe. Drop in the comments what you guys think. I'm gonna do more. This is just the part one, or I guess episode 1 of, the introduction to forex trading. So yeah, like, comment, share, subscribe, guys. And it's your boy 08 Capitals, and I'm out. Peace.